Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Wednesday, November 18th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Game Plan Financial. Every agent needs a game plan. For more information, please visit www.gameplanfinancial.com. Now for today's headlines. Housing starts in the U.S. fell sharply in October, a sign of potential weakness in the nation's economic recovery, according to a report by the Commerce Department. The report shows that housing starts dropped 10.6% to a seasonally adjusted annual rate of 529,000 units, the lowest level seen since April. The percentage drop was the largest since January. Markets had anticipated starts to increase to 600,000 units after September's numbers were revised upward to 592,000 units. Finally, compared to October last year, housing starts declined 30.7%, a significant concern for the housing market. In investment news, Wells Fargo Investments LLC has agreed to repay approximately $1.3 billion to clients whose funds were frozen in the securities market as part of a settlement with state securities regulators. The company has agreed to offer to repurchase ARS by February of next year and will pay back clients who sold securities at a discounted rate after the market froze. In addition, Wells Fargo will pay $1.9 million in penalties to states. The settlement comes after regulators in Washington state investigated allegations that the company misled clients by telling them the ARS securities were a safe and liquid option. Settlement negotiations are being led by state securities regulators in California, Georgia, Missouri, Oregon, Texas, Utah, and Washington. In regulatory news, the disciplinary records of brokers will be made available online to the public, even if they are no longer in the securities industry, according to the Financial Industry Regulatory Authority, or FINRA. The regulator said it has won approval from the Securities and Exchange Commission to extend its free BrokerCheck service by permanently making such records available. Previously, brokers' records became unavailable 2 years after they had left the industry. The SEC noted that brokers who leave the securities industry could still become financial planners or enter another field in which knowledge of their previous records could be important to investors. Such records will be made available on BrokerCheck beginning November 30th and will include sanctions such as fines and suspensions, as well as bars imposed by the SEC, Commodity Futures Trading Commission, federal and state regulatory agencies, and FINRA. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.